Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's once again great to be back here with you all, and I wish you all well. Those of you who have, sort of registered and sort of said good evening. In the last class, we started the topic of accounts of companies, which we went quite in depth, and we have come right up to financial statement, section 129. There was one query raised by Tunishka, which is on share capital and debentures. I'm not taking it today, or in that class I didn't take it up, but I have made a note of it. In another future class, I'll definitely consider it, madam, but kindly bear with me because the flow of this topic will be affected because that needs a little more work. Okay. Before we get into the next slide, we have an interesting question from Mr. Venkatraman. I think Srinivasan. Again, I get confused. Okay. If only you had your initial, like, then I would know which is your name. Okay. Now, the point here is, it's a nice distinction. Exception and exemption. It's a beautiful point. See, in a way, both are similar. That's why you are getting the doubt. What is an exception and what is an exemption? Am I correct? Now, see, there is a rule. That rule would be applicable 98% of the time. But there will be 2% cases, not to which those rules will not apply. Now, that will be called exception. That will be identified through a proviso. So I will make a rule like this, and I'll say no question which is not connected with this topic will be taken up. No question which is not connected with this topic will be taken up. Got it? Now, no question will be taken up. That is the rule. Okay, but then I will say, except in cases where I feel it is important, or except in cases where the question has some relevance for us, something like that. So there I'm creating a exception. I'm creating a situation to which the rule will not apply. These are exceptions. You'll be seeing it a lot in law. Whenever you see a proviso, provided that, whenever you see in a section, first the rule will come, then immediately say provided that. That is called a proviso. Provided that, once you see the word provided that, you will find that creates an exception. Okay. Now, normally exemption is where section itself will not apply. Provision itself will not apply to a certain category of people, or a certain category, identified category or identified people, it won't apply. That's exemption. Okay. For example, section will not apply to government company. Section will not apply to Section 8 company. It's an exemption. So this is a nice distinction. Though in reality, these two words are used synonymously. So for example, here I have used the word exemption, when actually what is meaning is exception. Okay. Because it is coming through a proviso. Usually exemptions will be coming as a separate subsection. Sometimes even a separate section. They will say the provisions of section so and so will not apply to blah, blah, blah. They'll give a list. So that is exemption. When you're totally exempted from that, you don't even have to bother about it. Right? So this is the broad way of putting it to you, sir. But so here we are using the word conditions for exemption from provision of CFS. But this is the general understanding. No need for you to get worried about it. So it doesn't matter. In both cases, both exemption and exception are regarding non or a section or a provision. So the non-applicability is more important. How it happens is not very important. You are exempted means totally you have nothing to do with this section. That is exemption. Whereas this part won't apply to you in case this is like the situation is like the exception. Okay, good question. I hope you got your answer. Now, see, Yeah, exactly. Though I have used the word exemption here, actually this is an exception. That is, in some cases, consolidation need not happen. What are they? That exceptional rules are given here. If it is satisfied, those situations, it is accepted. You can say. Or you can say this is also exemption because this specifically identifying certain categories of companies and saying, hey, if your members do not object and you are not listed or in the process of being listed and your ultimate or intermediate holding company files, then you are exempted. So this is an exemption. I will show you some nice exceptions when we come to some other topic. Specifically, I will show you the exception, how it operates. Usually the beauty is exceptions will be afterthoughts. That is, they will give the rule generally. Then one student will stand up and say, sir, how about this, like that? Then you meet, yes, yes, yes. In that case, it is accepted. So like that, one by one, their exceptions will start coming. Give a classic example. Your deposit rules are exception created. That is the entire deposit rule. See, the deposit rule begins with deposits or so and so, blah, or any loan received by or any amount deposited. That's complete. Then they say does not include A, B, C. Each one is an exception. Each one is an exception. Anyway, now central government has the power on its own motion, suo motu, or on an application by any class of company or company itself to exempt any company or class of company from section 129. It's a classic, there is a beautiful way of explaining exemption. See, they are saying central government will say this company is exempted. Entire 129 won't apply. Don't even bother. This doesn't apply to you. So this may be done by a notification, and such exemption would be in public interest. It can be unconditional or subject to such conditions. You see, we have already exemption. For example, insurance companies, banking. So they have been given clearly. You can follow your law. In case your law is different, you apply that and not the Companies Act, like that. Okay. Now, as usual, there are penalties in case of contravention of Section 129. Here again, only the managing director, whole-time director in charge of finance, the CFO, the chief financial officer, or any other person of a company charged by the board with the duty of complying with the provisions of Section 129. 129 deals with financial statement. So, any person who has been charged with the duty. Okay. In case such a person has not been appointed, there is no MD, there are no WTD, no CFO, no person has been charged, then all directors will become jointly liable in case there is any violation, in case there is any non-compliance or contravention. In this case, they are giving you there's a punishment by way of imprisonment to 1 year or fine, 50,000 to 5 lakhs, right? Now, 129A is again there. Nothing has been done as of now on this, but they have introduced it in the law. They're saying the central government may require such class or classes of unlisted companies, as may be prescribed, to prepare the financial results of the company on such periodical basis and in such form as may be prescribed. Okay. So, unlisted companies. Listed companies, anyway, under SEBI regulations, are bound. Not only SEBI regulations, they have something called the listing agreement with the respective stock exchanges, National Stock Exchange or Bombay Stock Exchange. So these agreements ensure that these companies have to prepare quarterly review, quarterly unaudited results, and they have to give it to the public, especially their shareholders. This will be announced. Okay? So that is part of their, for the listed companies. Here the MCA, the Ministry of Corporate Affairs, wants to bring unlisted companies also, which are of a certain size, to prepare. They not come out with any such guidelines as to who has to do this, how it is to be done and all that. They've enabled it through this section 129A. So they have given themselves the power, the parliament has given the power to the central government to prepare financial results on periodical basis. Usually, see, ideally it should be quarterly. And to obtain approval of the board of directors and complete audit or limited review So usually limited review means it will not be a complete audit, but still the auditors would certify it and give it, and that has to be uploaded like that. This may be a bit of a pain in case it is coming through, even if it is going to be prescribed for companies having a certain turnover, whatever it may be, it could still be a pain for people, because already one annual audit is a big pain getting it through for all companies. See, listed companies, especially large companies, may have a battalion of people to do all this. Most SMEs, which are corporatized, are having huge turnover and all, but then they may not have the capability to handle this. In which case, it will be a very big, but it's up to us, up to the MCA to decide. So then this has to be filed within the period of 30 days of completion of the relevant period, with such fees as may be prescribed. Okay. So this has become effective from 22nd January 2021, but not yet. There is no guideline on this. No rule yet. (134). We don't think that I'm jumping. I will cover the other sections. It is not jumping. What I'm doing is I'm not following the section order. So I'm following the logical order. So we've seen accounts, then we saw financial statement. Now we are going to see authentication of financial statement, meaning signing. Authentication means signing. So you print something and you give it. So how do I know this is it? So that has to be signed. So there 134, 1, 2, and 7 deal with authentication. Who signs it? So the financial statement, including consolidated financial statement, CFS. If you remember your last class, CFS means consolidated financial statement. For ease of explanation, I am abbreviating it. So whenever I say CFS, I mean consolidated financial statement, if any, shall be approved by the BOD. BOD means Board of Directors. BOARD, Board of Directors. Okay, Board of Directors. So it should be approved by the board. Before they are signed on behalf of the board, so they give many options. In case you have a chairperson, so there is a chairperson. For example, if you see the Board of Directors of Infosys, you have Nandan Nilekani is the chairperson or chairman. So where there is a chairman, that chairperson, where authorized by the board, can sign. Only chairperson signs. Or in case the chairperson is not authorized or doesn't want to sign, then 2 directors, out of which one shall be MD. One shall be MD. 2 directors, out of which one shall be MD. Right? Also, so chairperson should sign. In case he is not signing, then 2 directors, out of which, if there is an MD, the MD, managing director, shall sign. So usually we find 2 directors sign. I rarely seen chairperson. Whenever I'm signing balance sheet as auditor, I find 2 directors are signing. Okay. And Chief Executive Officer, if any, if there is a CEO appointed under the Companies Act, he will sign. CFO, officially appointed under the Companies Act, signs. Company Secretary, appointed under the Companies Act, signs. In the case of one-person company, it is sufficient if only one director signs. So one-person company may have more than one director, up to 15 directors, but it is enough if one director signs, right? Minimum one. Because it is quite possible that a one-person company may have only one director also. So for a one-person company, the minimum is 1, maximum is 15. For a private company, the minimum is 2, maximum is 15. For a public company, minimum is 3, maximum is 15. So OPC 1 is enough, right? In all other cases, either the chairperson signs or 2. In case there is an MD, one of the 2 directors should be MD, right? Company secretary has to sign. Chief Executive Officer has to sign. CFO has to sign. All of them become signatory. Of course, after all these 6 signs are over, auditing is over, then the auditor will sign it. That we will come to when we come to auditing. This is one part of it. The other part is auditor sign. That will come in audit. So auditor will certify. In fact, there is something very peculiar the auditor will say. If you have, maybe if you are doing your articles, or in case when you start, first time when you complete a statutory audit and you're preparing the final statements financial statement along with the client for signature by a partner, you will see there where he will say, this is the balance sheet referred to in our report as of event date for so-and-so firm, so-and-so partner. This is the balance sheet referred to in our report as of event date. Similarly, say this is the balance sheet referred to, this is the P&L account, profit and loss account referred to in our report as of event date. So it's a very, very peculiar thing. When you come to auditing, possibly I'll tell you that. But here, right now, what I want to say is, see, auditor is signing. The board of directors, etc., have signed. All these people have signed one balance sheet. That signed balance sheet has come to the auditor, who sees their signatures. Then he ensures that audit is completed, satisfies himself, and in one heart-stopping moment, he decides to sign and he signs it. So, one copy is retained by the auditor in his audit in the office. Then the rest of it is given to the client. Client takes it, does something. Suppose a client, okay, he takes it, makes material changes in the balance sheet, falsifies the balance sheet, then maybe forges the auditor's sign or gives, printed copy. Need not be signed, not have signed, just put signed and all. So the bank also lends money, whatever, and then later on it comes out that these balance sheet P&L do not tally with the ledger, etc., etc. Got it? Now they call the chartered accountant and say, hey, what have you done false thing? See, there is your sign by you. 1 second. This is a balance sheet you are showing me now. That's okay. Now I will produce the balance sheet which I have signed, which has also been signed by these gentlemen. And then he will take out the balance sheet which he has in his safe custody and say, hey, this is the balance sheet referred to in my report as of event date. If this balance sheet tallies with ledger, no way you can catch me. If they have falsified them, put them in the jail. But I have signed a balance sheet which tallies with the ledger, which is in every way true and fair and based on the books of accounts. See this. What is the proof? The proof is these fellows are also signed there. Look at their sign. Thereafter, they took my signature and then falsified it. Not my problem. Just want to give you this information. So say how to protect. So that you should keep one copy with you always. So that tomorrow, even if there is a dispute, you have your copy with their signatures to inform any authority. After that, you are out of that. Any prosecution proceeding, kindly go ahead. In fact, you will now become a witness to be called by the CBI or MCA to say that authentic accounts have been seen by you and these are the accounts. Anyway, this is more as an information I'm giving you. That is why this authentication becomes very important. Either if it is signed, today it is signed physically and then uploaded. It could as well be digitally signed. No problem, because then it will be digitally signed using those people's official non-deniability. Exactly. Electronic signatures also are perfectly the same situation. So long as the concept of a signature on a piece of paper is for non-deniability. Tomorrow the person should not say, I have not signed it now. So using that person's or signed using that person's digital signature certificate, non-deniable. Unless there he has to lead evidence then that the digital signature certificate was out of his control, somebody else signed it, blah, blah, whatever it is. Okay, there is you are safe because this is what they have signed. That's right. Okay. In fact, digital signature certificates provide much more support. Electronic signatures provide much more support because they give further support to us. And again, just for your information, I'm telling this to you, since we are in the area I'm talking to you, the Institute of Chartered Accountants of India, in consultation with the MCA and in directed by MCA, we have something called UDIN. Okay, UDIN, which means every certificate, every balance sheet, every report issued by a member in practice will have a unique identification called UDIN. The UDIN will be generated electronically through the Institute Ka website. And it has to be used within 1 month. Beyond that, you cannot use it. So the document should not be dated beyond that. Now, the point here is, the UDIN is a great protection. Is a great protection for the chartered accountant, because any document which is claimed to have been signed by the chartered accountant without a UDIN, sorry, not him. You are saying it's signed by me, but where is the UDIN? Without generating a UDIN, how did I sign it? So the UDIN becomes very, very, very relevant. In fact, this, what if one forgets to sign the document? It can't be uploaded, yeah. It cannot be uploaded. Okay. It cannot be uploaded. And UDIN is very, very important. In fact, I had this very strange experience when I got suddenly a call from a person, a gentleman, I hope he's a gentleman, who claimed to be a member of the press, a local vernacular newspaper, some newspaper, I forget the name, I don't want to mention the name. This gentleman calls me and he says, sir, we are getting reports from people that some licenses are being obtained. So he gave me a date which was well after the date UDIN was made compulsory. So I was so happy. I said, look here, that's a beautiful point you're making. You're saying I have signed something false. No, that's okay. You have anything to say about it? I said, yeah, I've got something to say. I need from you one very important information. Do you know what is a UDIN? UDIN, by which that certificate was issued? You are saying that you are a reporter, then you should have collected evidence now. So where do you see what is the UDIN? Give me the UDIN first. Then let me verify my UDIN register. And if in this number is there in my UDIN register, then I will locate that certificate first. Then only I can talk to you. If you simply show something and with my signature, nothing is known. The minute I said like this, he got totally frightened. You know, they will call you and they will blackmail you. If the person is afraid, now they will say, we will suppress this matter, kindly pay us now. Why should they? He said, look here, if you think I have signed it, no problem. You give me the UDIN. Based on that, I will confirm. Yes, on such and such a day, I issued the certificate. Worst case, that certificate would be now officially available, which I would have signed. Now, if the party has okay, voice is breaking. Let us see. Many people are complaining. Sir, voice is okay? Sir, voice is okay? Any problem with the voice? So students are complaining, sir, that voice is breaking. Hello, Jim. Your voice is also breaking. Sir, can you confirm if my audio video is okay? Hello? Yes, sir. Hope it is better now. Yeah, kindly, a few of you confirm that my voice is better and video is better now. So we are having a little bad weather in Chennai from where I'm speaking to you. And so it's a little, but I'm informed by the technical people that my voice is okay. Chalo, we will continue. I was just saying something about UDIN, about how a press reporter called me and he threatened me that, some bogus certificates have been issued with my signature on it. Absolute bullshit. He was simply playing games. There was no such document. I have definitely not signed 100%. But because of UDIN, I had a great control over that gentleman. So when he said, and I use the word gentleman very loosely, and I asked that gentleman who is a so-called reporter from a vernacular newspaper, I suggested, look here, you are saying that I signed a certificate which is false, and because of it something complaints are coming. Agreed. You give me the UDIN, UDIN. If you give the UDIN, I will verify. If it's in my records, I have a register of UDIN. And if it is tallying with that, and then I'll see what that certificate, I will show you. Then we'll compare with what you say you got. Then we'll see what you didn't and all. Then he got frightened. He didn't even know what a UDIN. He said, okay, like that. And he kept the phone so that I never heard from him again. So we should see this way we protect ourselves. That way our electronic signatures are far better. Electronic signature far better than actual manual signatures. Only thing you have to be careful about your DSC, user ID, password, access and all. You have to be very careful. Okay. So now we saw that certain documents are attached and certain documents are annexed. So the auditor's report shall be attached to every financial statement. So balance sheet, P&L is annexed, cash flow statement, then statement of changes of equity, then notes. The whole thing is annexed, stapler. Then the auditor's report is attached. So attached. Now, a signed copy of every financial statement, including consolidated financial statement, if any, shall be issued or circulated or published, along with a copy of any notes annexed to or forming part of such financial statement, the auditor's report, and the board's report. So the board's report is also attached to the financial statement. So usual sequence would be like, there would be if you go through any well-known company annual report, when there will be a chairman's statement also, chairman's address, then the director's report, then annexures to the director's report. There are a lot of annexures to the director's report. Then you will have the auditor's report. Then, and its annexures. The auditor's report has annexure. Like later on when you come to auditor's topic, you'll see CARO is there. Company's auditor's report or annexure is there. Then all that is kept. Then the balance sheet. Then P&L. Then statement of cash flow. Then statement of changes in equity. Then the notes. And the notes will keep going on and on and on. Like, Draupadi ka sari was there. And Dushadana was pulling. Krishna was giving sari here to her. So continuously it will go. Like Draupadi ka vastra, it will keep on going till the very end. And finally they will get over. Okay. So this is the format. Broadly. Okay. With the more complex the business, more activities, larger the volume, bigger the reporting need. Smaller the volume, lesser the complexity, lesser the reporting need. Now, we are now moving on to 134.3, which deals with board's report, the report of the board of directors. So according to Rule 8 of the company's accounts rules, the board's report shall be prepared based on the standalone financial statement of that company. So each company will have one financial statement which is standalone. Even the subsidiary will have one standalone financial statement, which will be audited by its auditor. And that auditor will give an audit report. Now, it will be based on that standalone. Later on, for consolidation purposes, they might use the same thing, or they might have special purpose statements which are given only for consolidation purpose. Whatever. That will also be signed by that auditor, and separate report will be issued. Now, the point here is the board's report also will be on the standalone financial statements and shall report on the highlights of performance of subsidiaries, associates, and joint venture companies, and their contribution to the overall performance, etc., etc. See, sometimes the board's report can be very, very informative. But one complaint is for an active investor or a trade person who is engaged in the market. By the time the board's report comes, it is too late. So many times, the board's report is more for decorative purposes than Standalone means on its own. That is not consolidated. Okay, that's the easier way of telling. What is standalone? Standalone means not consolidated financial statement. So A Limited is the holding company of B Limited. Now A Limited, without consolidation, there will be one balance sheet, right? Financial statement, right? Without consolidation. That is called standalone financial statement. Similarly, B Limited, without being consolidated, it will have one financial statement now. That is called standalone. Then A will get consolidated into, B will get consolidated into A. That is called consolidated financial statement as against standalone financial statement. So there will be one standalone financial statement of A Limited and one consolidated financial statement. For B Limited, only one standalone. Okay. Hope you have got the point, Mr. Tiwari. So we call it standalone. Standalone means without any support. Means consolidated means everything together. Standalone, separate, without any consolidation. Okay. Now, the main broad content of the border is given in 134.3. Broad content. Question, should I know this by heart? Not really. From our exam perspective, try to know broadly what are there. Some of these items would be dealt with a little more in detail in other sections and topics. Some are basically understand. Okay. Yes, sir. Means KMP also do some commentary on public via recognized media about some highlights. I'm not able to understand what you're saying. See, whenever the board of directors of a listed company takes certain important decisions, they have to inform it almost immediately or within some 4 hours, 5 hours like that, or 1 day like that. They have certain conditions. So the stock exchanges, should be informed for certain major decisions like bonus issue, rights issue, proposal, demerger proposal, all that immediately should be informed. Or so that the idea is everybody should be on the same. Once that information is published, now it is available to everybody. Because in the stock exchange, you'll immediately put it up in the in its there will be a running news tracker will be there. In that, it will be put. So continuously it will be running. So many traders and people now will be constantly watching. If you're going to moneycontrol.com also, you will see continuously they'll be publishing this type of information about companies in that. So it will be scrolling continuously. Okay, you can see that. Good. Now, so mainly what's to be given in the board report, the web address where the annual return has been placed so that people can download it whenever they want. In fact, see, if you want any listed company, to an extent, all the bigger companies, 100% you will get it. Some of the smaller companies, which are there only to cheat the public and sort of not see, then that itself is a good sign that these fellows are not worthy of your consideration. So they will not put up their annual report in their website and all. So most companies will put up their annual return in the website. So if you want them, for example, if you Dabur Limited, you go to the Dabur Limited website, there you will find financials. Click on that, current financials will be there. If you want older financial statement, they'll have a heading called archive, ARCHIVE. You click that, you will get for at least 6-7 years back, you will get. So if you can use it. This is very important for people like me who do analysis, fundamental analysis, or when we are trying to look at a company. First thing I do is I look at the minimum 5 years back balance sheet, and I see certain criteria. Then based on that, we will see what can be done, how is it, all that happens. So for that purpose, it's very important. Today, information is readily available. 90s, when online was not so high, annual reports used to be printed and circulated. And we used to get it only by going to either you have to get it from the company, which is very difficult, or very, very late you will get it. The institute, the ICAI has used to have a very big library of annual reports. Why? Because most of the finance directors and CFOs are chartered accountants. So they will be requested to send a copy of their annual report to the institute. So whenever it is posted to the members, now along with that, one copy will come to the institute. So it will be there. So that is one source. Like that, we used to hunt around for these annual reports. Today, click of a button, you will get any company annual report. Say any company, listed company, right? Listed company. Even unlisted company, public company, you can go to the MCA website and get it. It will be uploaded there. You can download it. Public document. Once it is uploaded, public document, you can take it. Okay. So just for information. Similarly, there will be something called Director's Responsibility Report. What that is and what are the contents of that report, we'll be seeing it very shortly. Also, declaration by independent directors as to their independence. This topic on independent directors is not in your syllabus. It is in the final syllabus. But basically, independent directors are people, listen to me, independent directors are people who are not having any financial relationship with the company. They are not having any financial relationship with the company, subject to certain exceptions as usual. But subject to those exceptions, they will be independent, meaning they will have no financial dependence on the company. So every year, that independent director should give a declaration that they have not done anything by which their independence is violated. Means they should not get any remuneration from the company, etc., etc. But there are some small exceptions about which you need not know. Subject to that, they should say we are independent. Particulars of contracts or arrangements with related parties. Again, not in your syllabus. Final syllabus may have. But the board of directors report should mention details of these contracts with related parties in a separate form AOC2. It has to be given. Okay. And see, this is certified also by the auditor. This part of it will be given also certified by the auditor as part of his auditing reporting requirement. Again, if the company has done any conservation of energy, technology absorption, foreign exchange, means foreign exchange was relevant once upon a time when we were starved for foreign exchange. So any company which made sales in foreign exchange and generated foreign exchange was God for us. Today, it's a burden because today we have more than sufficient forex reserves. So really, if they get it, we are not really. But he said, you manage it, man, because foreign exchange can be both good and bad. See, today we are saying it's there. Tomorrow it may not go up. It may go down. So it's today. That is why we have moved from foreign exchange regulation era to foreign exchange management era, which you are going to see as part of your syllabus. Okay, that we are moving from foreign exchange regulation control to foreign exchange management, meaning you have just sufficient forex. It is enough like that. Now, company's policy on directors' appointment and remuneration. Just a policy framework should be published. State of company's affairs. This is a wide area where the MD and board will have a lot of opportunity to talk. Suppose they have set up a new plant or new product range launch, whatever they can say. And similarly, risk management has become very important today. So the company needs to tell how they have developed and implemented risk management procedures, how they are controlling or anticipating and avoiding risk. Number of board meetings held, number of meetings of the board which were held during the year. Then details of fraud reported by auditors. When we come to auditors, we will see that it is the duty of an auditor to report fraud in case he comes across. Okay. Now, in case such a report was made by the auditors, that should be noted by the board and mentioned here. They may give some statements mitigating, but still they have to report, yes, this fraud was reported by the auditors. Now, if somebody is going to ask me a question, sir, have you seen any have you seen any balance sheet with fraud reported by auditors? I have not seen. I have not seen. Fraud reported by auditors, I have not seen. If one of you comes across, it would be great if you can share. That will be a great example because rarely you will find an auditor reporting a fraud in the financial statement, and it will be also reported by the directors in the board of directors. Okay. comments by board on remarks made by auditor and company secretary. In case the auditor or the practicing company secretary who may be certifying the annual report, if they have made any adverse comments or qualifications, that has to be addressed in the board report. So the board should address it and say, hey, the auditor said like this in the report. Don't worry, this is what it is all about, or whatever. See, so your auditor's qualification is a very serious thing. So the auditor is saying it reveals true and fair view subject to the following. So he's saying this to this extent it does not reflect true and fair view like that. Similarly, I'll make one more point. In my life, 35 years of practice, I have given only 5 qualified annual reports. I mean, audit reports. 5. Maximum 5. That's all. Yeah. Because in many cases, if I see the simple logic, for me, qualifying makes no sense. In qualification, sometimes I'll say, please recuse me, I'll go away. You get somebody else, you do whatever you want. No compromises. Because even if I qualify, my conscience is there. So I take on companies that do not need qualification. They compliant. They do what has to be done correctly. Reporting is done correctly. Then we'll go on with our life. Simply qualifying for qualifying sake, protecting me. No. The company is doing it correctly, why qualify? And if the company is not doing it correctly, why certify? Get out. Don't even go there is the point. Okay. Then tomorrow protecting yourself through words, that is Ardha Satya. Simply protecting yourself. This is my view, not necessarily the views of Institute of Chartered Accountants of India, but my view as a senior professional, my view. My practice built on that philosophy of have only good clients, be safe, let them grow with them. Policy seems to have worked over the last 35 years. Okay? And I've rejected many clients. Even sometimes, I've had some of my team members, they used to feel bad. Why is this man rejecting this beautiful audit? Why is this man not taking it up and earning so much money for the firm? I said, no. What seems to be attractive today is a hidden poison apple, poison fruit. It will cause problem later when I'll tell you it's going to cause. Correctly, what will happen is 3 years down the line, the same company will have a huge problem. When somebody else would be audited, right? Not us. Okay. Chalo. Now the point here is, see, management discussion and analysis is not part of the MCA. It is part of the SEBI guideline, only for listed companies. But that will also be included in financial reports. Absolutely correct. The director's report. So, over and above what is mentioned here, there may be other matters also to be reported because of SEBI and other bodies. That will also be included in management discussion and analysis. Absolutely. In fact, these are all very interesting documents when people go through them. But you see, somewhere I have found that most of these are doctored documents where somebody will go heavily doctored, heavily reviewed, words are carefully given. And by that time, we would be aware of much more about that company than what these guys are going to say in that management discussion and analysis. We would know much more about that industry, much more about that company's performance and all that. And we can easily guess where this guy is going. By that time the annual financial statements are signed and come to us, the smart investor will know where this company is going to go. Okay. You can't, if you're going to rely only on that management analysis and discussion, by the time it's too late. By the time any reaction to the price would have reacted already. Okay, that is the point. If you're going to use that information for taking market-related decisions, my feeling is that it may be too late. By the time it's coming out, it's well-known matter. Now they are only trying to word it. Either if it's a negative, they will try to spin it. Okay, if it is a positive, they will build it up. But by then, the positive would have been factored into their price, right? So this is from a purely market perspective, I'm saying. But from an academic perspective, yes, you can go through it. Definitely, you will find it useful. My humble suggestion to you all, outside of examination, etc., take one balance sheet or take one financial statement of one company, any company, ideally simple company, simple businesses. Don't take complex businesses like my friend Yudraj Honmane, he's taking ITC. So, yeah, whatever. He is also giving me that ID UDIN. Why he is wasting his time typing some UDIN, I don't know, in my query pad. Sir, don't waste query pad for that, sir. UDIN. Why should I know what UDIN has been put there? Yeah. So long as you saw the UDIN, I'm happy. Okay. You're memorizing the UDIN or what? Okay, that UDIN has, that is UDIN good. Every annual report will have UDIN. Don't worry. Every audit has will have UDIN. Without UDIN, nothing will be certified by me. Every UDIN has to be placed below. Same. People will generate the UDIN and then only bring it to me for signature. And then the UDIN will be printed beneath and then go. Okay. So how many UDINs you want? I will give you. Okay. No. PMC Bank. What is that PMC Bank? I don't know. Sir, I don't know what is a PMC Bank. Or you remember, sir? What do you mean by that, sir? PMC Bank. Very good. Tata Motors is an excellent balance sheet. Infosys also, you can go through it. Very, very good. Like that. The idea is to just without any intention to memorize and all, expose yourself to it. Suddenly you'll find in the exam, the way the question is worded, you'll be able to give a more authoritative answer. That's the point. Okay. Practical orientation of good use. In case you have any doubts based on that, do bring it to the class, but don't, sort of when some free time is there, bring it. Definitely, if it is of relevance, I'll take it up, but try to word it in good English, because sometimes I'm not able to understand what you are putting. Okay, I'll definitely react to what you're saying and do it. I'm not aware of this PMC Bank, sir. Sir, there are 1 million companies in the market. Why should I remember every company? मुझे नहीं मालूम. I'm happy मुझे नहीं मालूम. If it is gone bust, good. See, about PMC Bank, I don't know. What about Yes Bank? I'll assure you, I know. When Yes Bank was incorporated and went for public, people were telling buy. 100% I said Yes Bank, don't buy. It's not good because of many, many reasons which I can't state here, about which I know, which is, you can even say it is professional knowledge. 1, 2, by going through the second year balance sheet itself, I know this bank is over trading. It's not a good bank. It is risky bank. So people are buying. The price was also going up. Many people, who know that I am an active investor and a value investor, keep on making fun of me. Srikanth sir, you have not bought S Bank. See how it has gone up. See how it has gone up. I said, look here, if you think the price is good, sell it and get out of that bank. No. Finally, it goes all the way, goes bust, as you say, comes down. So, no problem. So please do not, first of all, don't ask me whether this is a good company, that is a good company. Offhand, who can say? It's a lot of think through. Analysis. Okay. Infosys annual return. Sir, 300 pages, madam. See, no problem. Don't read it fully. Scan through it. Make a printout of it or use a tab. Scan through it. Whenever you come across something interesting, highlight it. Or pay bookmark it. Keep going. Like that. Casual. Why don't you sacrifice? I'm not talking Shantika alone. Shantika may not be a Instagrammer or a YouTuber and all. But some of that time sacrifice it for this activity. What do you say? And you will find that it will reward you in multiple in your career as a chartered accountant. Anyway. Again, out of the 300 pages, much of it will be pictures, advertisement. Just skip all that. The core content will be hardly 100 pages. Believe me when I say that. You ignore the consolidated financial statement. That will save you a lot of time. Forget the CFS. Completely CFS, you ignore it. Only take the standalone. Board report, auditor's report. That will be hardly 100 pages, 150 pages. Out of that, you remove the advertisement. So like that you go. Okay, madam? No problem. My only suggestion, if you think it's not worth it, don't. But my suggestion. So, CSR policy, amounts carrying reserves are paid by way of dividend. So they will mention clearly, so much is being transferred to reserves and so much is to be paid by way of dividend. Then CSR policy and initiatives. More about CSR in the next class. When I come to next class, we will do CSR. Particulars of loans, guarantees or investments, material change affecting on financial position, other matters, all this will be done. So there's nothing great, just information. Now, listed or other public companies having paid up share capital of 25 crore or more shall contain statement indicating the manner in which format of annual evaluation of performance of the board, its committees, and of individual directors has been made. So for listed companies, evaluation of board performance, very important. For other public companies, which have a paid up share capital of 25 crore or more, there should be a statement. How is the performance of board or its committees reviewed? It's a very, very complex matter. In fact, a firm of company secretaries whom I know is engaged in research on this area. Because see, when I am being evaluated, now I have a clear-cut KRA. As an employee, there is a KRA. Key result areas are there. Okay, key performance indicators are there. So if you perform on all of them, the EPMS is there. Employee Performance Monitoring System. Automatically, your score will be there. How do I do this for a board of directors? So something has to be designed. So there, the whole strategy has to be compared. Their performance is to be evaluated against the competitors. So was the strategy that they have designed worthy? Did it take them to the next level where they wanted to go? Were they able to reach it? This is how the board will be, performance of the board will be reviewed. So that manner of evaluation should be mentioned in the director's report. So where the disclosures have been referred to in the subsection have been included in the financial statements, such disclosures shall be referred to instead of being repeated in the board. Suppose some of these items are also mentioned in the financial statement as part of the notes, then you can simply refer to so-and-so note. For example, particulars of loans, guarantees, or investments. You can say refer to whatever, and that will be enough, right? Where the company's policy on directors' appointment and remuneration, etc., and regarding CSR is on the company's website, it is enough if you give the salient features and indicate the website where they can go and get the full report. Okay, because there is a separate CSR policy which should be uploaded in the website as per the CSR norms. Now, the central government may prescribe an abridged board's report for the purpose of compliance with this section by one-person company. Okay, so in case they do that, that has to be complied with. In case of a one-person company, the report of the board of directors to be attached to the financial statement under this section shall mean a report containing explanations or comments by the board on every qualification reservation made by the auditor. Okay, see, so OPC, let's think about it. Who is the shareholder of a one-person company? Mr. A. Who is the director? Mr. A. Now, the board is giving a report to who? To the shareholders. So A is giving a report to himself. Makes no sense now. Think about it. So they are saying, hey, OPC, you don't have to give a report. But in case the auditor has qualified it, then you have to give your reason or comment for that by the board. That alone is needed. Nothing else is needed for a one-person company. Am I correct? See, if the company has done well, A need not tell himself as shareholder, Mr. A, we are happy to inform you that your company has done well. Because I know that we have done well, yeah. Same person, I am the director, I am the shareholder. Therefore, that foolishness they don't want, they say, no need to give. Only in case there is any qualification by the auditor, reservation or adverse remark, that alone you reply in this. Otherwise, no need for report of the board of directors. Obviously, now is the point for OPC. But just for your information, and even at the cost of irritating or making some of you feel bad, just not to waste your time. Every year on the 31st of December, every year, right from possibly 1997, 98 onwards, I'm doing this. Every year on 31st December, I usually travel outside Chennai, my hometown. I sit somewhere else. My family, I go. And then 4 hours on 31st December, between, say, after lunch, 2:30 p.m., right up to 5:30, 6:37. After that, New Year celebration, all that happens. But during this time, 4:30 to 7:30, or sometimes in the morning on 31st, whatever, 4 continuous hours I sit. I take out sheets of paper, my diaries, and then I ask, what did you do in the last year? What did you do? What were your goals? What did you achieve? Where did you go anywhere near where you wanted to go? Right. And then there's a sort of an annual report to myself. And then, then next year, what you want to do? How are you going to justify your existence for another 365 days? So I put down that as a sort of goal statements, broad goal statements. Strategizing happens later. Broad goal statements. A little bit strategy also can go there. And then keep it all safely, lock it, go for my New Year celebration. Why I give this example to you is that way each one of us, can give an annual report to ourselves. Okay. And this will make us more focused on some kind of a vision. Okay. There could be a long-term vision. That long-term vision is there. In addition to that, you could have a short-term review and refocusing on the vision. That's the point. This way, the chances of your achieving your goals and achieving on your vision are becoming better. Instead of just being dreams, they would actually become realities. The man talking to you is 58 years old, and this has been done by him since 1998. So don't take me otherwise. The idea is to give you a little bit of clarity on how you can make your life more meaningful and more purposeful. Now, director's responsibility statement. See, directors have certain responsibility vis-a-vis accounts, financial statement. Now they have to confirm that they have complied with the responsibility, that they have actually done it. So they should see this part of it is fairly theoretical. Allow me to run quickly through this. In case you have just try to do it this year. Tomorrow is 1/12. So you have 31 days. On 31st December, try what I said. Just allot yourself 2 hours, 2 to 3 hours. Okay. Now, so in case you have any major doubts, we will raise it. Otherwise, there's no need. But from the exam point of view, this could be important. This could be important. So the director's responsibility statement shall state that the applicable accounting standards had been followed along with proper explanation. So they should commit themselves in writing and say, hey, we've complied with the applicable accounting standards. Okay. Also, they should say the directors have selected such accounting policies, and applied them consistently and made judgments and estimates that are reasonable and prudent, so as to give true and fair view of the state of affairs of the company at the end of the financial year and of the P&L of the company for that period. So thereby clearly the responsibility for framing accounting policies, applying them consistently, making judgments and estimates that are reasonable, prudent, and ensuring that the accounts, the financial statement, balance sheet and P&L give a true and fair view of the state of affairs of the company and the P&L is the duty of the directors. Okay? It is not the duty of the auditor. Auditor's duty is to audit. Ensure that the estimates are reasonable and prudent. If not, if I feel that they have in some way not complied, then I will qualify. But it is not my job to ensure that accounting policies are there. Okay? And lack of accounting policies you cannot tomorrow say auditor should have told. No, sorry. It is the duty of the board of directors to prepare. Okay. That is why you should not, as practicing member, you should not undertake. Later on, you will be seeing you are prohibited from doing accounting services, finalization services. That's not your job. Let them do it. Let them submit. Then you audit. That is how it should be. Okay. So that is one way we can maintain our independence. So, also that directors had taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this Act for safeguarding the assets of the company and for preventing and detecting fraud and other irregularities. Right. So, one method is usually they have something called internal audit. See, in addition to internal controls, which will anyway be there, whether these internal controls are in place and whether they are actively being followed, they will have a constant monitoring, which could be internal audit. Okay. In addition to a statutory auditor, there should be or could be a internal auditor. In fact, you will be seeing in this topic that certain companies' internal audit is mandatory. The directors that prepare the annual accounts on a going concern basis. Going concern means that the company would function and commercially be viable and pay its dues as and when they become due for a reasonably foreseeable future. So that tomorrow it will not be closed. It will be capable of running for a reasonably foreseeable future, is the point. So they should ensure that this. The directors in the case of a listed company had laid down internal financial controls to be followed by the company, and such internal financial controls were adequate and were operating effectively. So please note, here we are talking about overall internal controls. Okay, whereas this is internal financial controls. I'll tell you one simple financial control. It's easy. Suppose you want to make purchases. Okay, you should clearly indicate value. So up to some value, who can take the decision? Beyond, who will take? Finally, above certain level, who will take? Capex, who will take the decision? These are all. This is the internal financial control framework. So above, say, 1 crore per annum purchase, it should be approved by the purchase committee. Purchase committee will again comprise of one member from the audit committee or one from the board, then maybe from the technical department, quality, financial control, whatever. See, I'm not. So also you can have a financial control that says, if you want to buy certain commodity, for the order size will be so much, then minimum you need to get 3 quotations. And that should be reviewed by either a purchase committee or by the officer with that designation. Then who has to document and create a document comparison, and then finally select which is the technically they should all be evaluated, then financially, and everything should be documented and kept so that the company got the best deal possible. I mean, this is one example. Okay. So the directors have devised proper systems to ensure compliance with the provisions. I've highlighted something here. So the directors have devised proper systems to ensure compliance with the provisions of all applicable laws, and that such systems were adequate and operating effectively. But sometimes when some startup company directors, they come to me now and they say, Mr. Shrikant, kindly brief us on our duties. I'll show them this. I say, look here, you are supposed to be aware of all applicable laws. Okay. Which is why most startup companies that are funded by private equity and all, they will ensure that they hire a multinational firm to do a due diligence. Top to bottom, an international law firm will do a due diligence, and then they will give a report as to whether this company is complying with all applicable laws, an advisory report to the board. So that they may charge you some lakhs, but it's worth it, because at least you got some support to say, hey, look here, I'm not a lawyer, I'm not a legal man, I'm not a chartered accountant, but I'm an engineer. But this is what I did. I got a report, and the report says, that all are compliant. That's all. Thank you. And I kept monitoring it. Some kind of a relief. Okay. Especially labor laws, etc. You have to be very careful. Ignorantia juris non excusat. You cannot plead ignorance of law for non-compliance. You cannot say I was not aware of the law. If you are a citizen of a country, you are deemed to be aware of all the laws of that country. Sumanji, about accounting and law, don't compare and ask me any questions. Whatever I'm giving here, you take it. Okay. And one more thing, accounting standard 1, you are saying you as a part. See, I think your confusion is you are not distinguishing between the two topics. Your knowledge of accounting standards is laudable. Okay. What going concern can be presumed, which means that you need not mention it as part of your accounting policy framework. Are you able to understand? That is different. That is given as part of the notes on accounts. What it said. Whereas here in the director's report, they are saying we are prepared on a going concern basis. So you feel that the MCA is wrong, kindly send a mail to them. Say the exact point that you put, send it to under Secretary, Ministry of Corporate Affairs, New Delhi, that this is so in accounting standards 1. We have been taught by our faculty that under section 134.5, this is how it is. Kindly don't do it like that. You please tell them. They'll be more than happy to receive your comment. Okay. In my case, I'm very clear. This is a director's report content where the directors are telling accounting standard 1 is a notes on accounts, where it has to be given in the notes as part of the accounting policy. Their going concern is an assumption which need not be again stated. Okay. I hope you got the clarity, no, Sumanji? Got it? No, your knowledge is laudable, but don't confuse between topics and don't try to contradict. You don't think that this is contradicting that. Don't study. When you're studying itself, study with clarity, not with contradiction. If our intention is to contradict the topic, subject, we will not learn. Whereas if our intention is to understand, we will learn more. This is my humble view to you. Okay. The people who keep on saying, hey, this is wrong, sir, that is wrong, sir, generally are more interested in knowing what is wrong than what is the actual law. Got it? So, again, someone not hit you, personally not to you, but to any student. See, the more you're operating at a shallow level on the top, you're not able to go to the depth of the topic. Go to the depth of the topic, these shallow level issues will go away. You will combine the two knowledges and you'll say, yes, Board of Directors report, the boards are going to say that the accounts are prepared on a going concern basis. But I should remember that in the notes on accounts, when I'm giving, there is no need for you to do it like that. So again, in SAC, there will be a lot of overlaps between the topics. Know everything is the point. Going concern is the undercurrent of everything now. Accounting, auditing, everywhere going concern is at the back of our mind. Whether the company is a going concern. Okay. Again, there we have to ensure that we have verified whether the company is a going concern. Okay. The board's report and any annexures thereto. In a way, when an auditor signs a balance sheet, he is signing, first of all, he is confirming that it is a going concern. In case after he has signed the balance sheet, day after tomorrow, the company is found to be insolvent, danger. So you have to be very careful. The board's report and any annexures thereto shall be signed by, see, there we saw financial statement. Here we are seeing board's report. This should be signed by chairperson or two directors, out of which one shall be managing director, if any, right? Same. This is not signed by CFO's company secretary and all. Only financial statement. Here only chairperson were authorized by board or two directors, out of which one shall be the managing director, if any. In case there is any contravention, then the company will have a fine of 3 lakhs and every officer 50,000 rupees. Members have the, as you can see, I'm jumping sections. Some of you who are having the Board of Studies material with you, you can also move the page numbers to that section if you want. Otherwise, just follow what I'm saying. Later on, you come back. You might ask me, why are you not following the Board of Studies pattern? I'm so totally Board of Studies material is beautiful. It is a beautiful material. But logically, I'm trying to combine sections which will be easier for you to remember. That is why. Nitesh Kumar Boy is saying, sir, you shall also teach advanced accounting. That shall is very crucial in law because shall means it is mandatory. So you shall teach means no, I can't. Absolutely zero competence to teach advanced accounting. Already my story is known to you. I am the man who wrote the final exam without knowing holding company subject consolidation. Okay, such a man, how is he competent to teach you? So intelligent people, how can I teach you advanced accounting, man? I'm totally zero in that. I cannot teach you. You people will be having more knowledge than me. Seriously, at the theoretical level, at the institute examination level, you will be having a lot more knowledge than me. Believe me when I say that. Okay. Now, every member is entitled to a copy of the financial statement. So the copies of audited financial statement, the consolidated financial statement, audit report, any other document, etc., to be annexed, attached, whatever, will be sent to every member. So every member is entitled, every trustee for debenture holders, other persons. And this should be circulated. The financial statement should be circulated not less than 21 days before the general meeting, AGM. Before the AGM, where you are going to adopt it, not less than 21 days. Later on, when we come to management and administration, we will see that notice of AGM should be given 21 clear days before the meeting. So notice also should be given 21 clear days, and all these documents have to be given 21 clear days. So you will find that the many companies, they combine the notice and the annual report. So when you have downloaded Infosys annual report, just have a look. The chances are it may also have the notice calling the AGM. Okay. Now, when you come to management administration, do a small study whether the date of that notice is 21 clear days before the date of the meeting. Okay. And we shall also presume that the audited financial statements were circulated 21 days before the general meeting. For a Section 8 company, okay, we saw that now one of the benefits of a Section 8 company, one of the exemption was Section 8 company need not send it 21 days. It is enough if it sends it 14 days, the notice. Same way, the financial statement can also be sent not less than 14 days before the date of the meeting. How to send it? The financial statements are to be sent not less than 21 days before the meeting. If the copies of the documents are sent less than 21 days before the date of the meeting, they shall, notwithstanding that fact, be deemed to have been duly sent. See, in some exceptional cases, we might want to give less than 21 days notice, in which case that notice shall be valid if agreed to by the number of members as stated below. So, in case of a company having a share capital, suppose it is sent, less than, say it is sent 4 days before the meeting or 5 days before the meeting. Then before that or along with that, they should get a consent from majority in number entitled to vote, representing not less than 95% in value of paid up capital. So they are asking for two criteria. One is 95% in value, but they are also saying majority in number. See, a simple example will help you understand. Simple example. Suppose a company has 20 shareholders, right? 20 shareholders holding 95%. 20 shareholders holding 95%, right? 30 shareholders together are holding 5%. 30 shareholders are holding 5%. So happens. How they are holding, don't ask me. So totally what happened now? Please listen to my example. 20 shareholders are holding 95% in value of the paid up capital. Let us say that the paid up capital is 1 lakh shares. 20 shareholders are holding 95,000 shares. Remaining 5,000 shares are held by 30 shareholders. In some manner they are holding it, 30 shareholders. Now, if you simply say not less than 95% in value, then this 20 can decide. Because together that 20 is controlling 95% in value. But they say no, it is not enough if 95% in value agree. There should also be a majority in number. Are you able to understand? Majority in number, which means in this case, 20 are holding 95, 30 are holding the balance 5. Now tell me, how many members should agree? How many members should agree? How many members should agree? In my example, ABC Limited, 20 members are holding 95%. 30 members are holding balance 5%. Or out of 1 lakh shares, 20 members are holding 95,000 shares. Balance 5,000 shares are held by 30. How many members should agree for giving copy of documents less than 21 days before the meeting? How many members? Rutraj Homani says 25. See, 25 would be a tie. 25 would be a tie. Almas Sheikh says 20. How? See, 20 controlling 95 are not majority in number, by a majority in number. Majority means not exactly 50, more than 50. Only the majority. So 50, see 20 are holding 95, 30 are holding 5. So together 50, exactly half is 25. Majority would be 26 or more, 26 and above. Okay. That 26 and above should hold 95. It's a dual condition. Both are to be satisfied. So the correct answer is Aparna Mishra is saying at least 26 or more than 25. Agreed. More than 25 is correct. So long as it is more than Rita Banerjee, 25 or more members is correct. And Rituraj Honmani says 25 members. No. 25. No. 25 plus members holding not less than 95% of the value. Okay. I'm not able to see. Why don't you be more clear now instead of 25? No, sir, I don't get what you're saying. Make it, see, I think Aparna, Rita Banerjee gives it correctly. Now, you put it this way, at least 26 members holding at least 95% in value of PUC. I think that is the correct way. At least 26 holding at least 95% in value. Is the point. In our example, even if these 20 fellows together say yes, they're still only 20. We need majority in number. Na? Are you able to understand, Ms. Sheikh? We need majority in number. Na? So 26 is needed. At least 26. Don't say exactly 26 also. Because then you can have 27, 28, 29, whatever. Till 30. So this is how it is. Okay. Good. Now, in case of a company not having share capital, members having not less than 95% of total voting power. Suppose not having share capital, 50 members are there. Then total voting power is 50, not less than 95%. So 50 ka 95% would be what? 40, 47.48, 47.5, now the 48, something like that. Should have been. So that is how it is. See, this type of conditions you will see a lot in this law. In company law, you will see majority in number entitled to what? Representing not less than something. So this type of combined conditions you will see. You have to be very careful in those cases. No, Sayandas, I think you have not understood at all. The question is minimum number you need. See, if everybody votes, it will be great. If 20 plus 10, 30 hold, they vote, it will be great. They may not now. So my question was, minimum how many do you need? My question was, minimum how many do you need? And the correct answer is at least 26 is the correct answer. Minimum you need. At least 26 should vote is the correct answer. The correct answer is at least 26. Minimum 26. Okay. See, one more thing, Riturajji and others, once you write an answer in the exam, Gatham, over, it's gone. You can't go back and correct it. Now at least Srikanth, you can tell, I told this, I told that. Srikanth also has to accept whatever you say. But examiner, no. He'll only see what you've written. So which is why, before you freeze an answer, please see it once more. Accept that we can be wrong. Okay. In chapter 2, we saw section 8 company can give notice 14 days prior to meeting. Correct. Similarly, section 8 company can also circulate the financial statements not less than 14 days before the date of AGM. So what are you doing? You are making a statement, asking a question. What is your purpose of that comment? Sometimes a non-question comment, I don't know what to do with it. Now, see, this is a similar question for you to answer. Navyu Chemicals Limited, an unlisted public company, has 200 members. Its paid up share capital is share capital is rupees 50 lakhs, consisting of 5 lakh shares of rupees 10 each. Paid up capital, equity. The company is proposing to hold its AGM annual meeting on 28/9. There's a delay in submission of accounts or audit, etc., and hence signed financial statements were ready only on 10/9/2021. The company has obtained the consent of 160 members who are holding 45 lakhs of PC. Can they proceed to circulate the financial statement less than 21 days before the meeting? This is the thing. Again, don't give answer like no, yes, and all. Majority number greater than or equal to also okay. Majority number representing not less than. So equal to 95 also is okay. Majority number greater than or equal to 95% of paid up share capital. Anmol Batwa, you are right. PUC, paid up capital, not pre-university course. Paid up capital. Here you can see. Paid up capital. Paid up capital. Quickly, can you give me an answer for this, whether they are doing it correctly or not? So the number of members is 200. I'm waiting for your answers. What is 95% of paid up capital? See, you calculate 95% of paid up capital. Paid up capital is 50 lakhs. Huh? Into 95%. I'm getting 47 lakh 50. The answer I'm getting on the calculator, which I always use, I never use my stupid brain, which is useless. I prefer to use an electronic device called calculator or Excel spreadsheet. So, of course, I can do calculation or not, but why? See, here somebody has made the mistake of saying, yes, as majority number is holding 95% of PUC. Abhishek Bajpai, please see what is 95% of 50 lakhs. This 47 lakh 50. Rito Banerjee. Sir, be careful, ba. See, I'll tell you, this Buddha has already finished this exam. You understand? This Buddha has already written this exam. 4 times, 2 times he wrote, 2 times he wrote cleared. He is gone out of the system now. You people are there in the system still. Please see what you are doing. In the exam hall, I don't want this to happen. Don't be overconfident. Small mistake you write, you come out 3 hours later, you come out, then too late now. Now at least I'm alerting you. All of us make mistakes. No, you are not God. Just look into the mirror and check for me. Are you God? I am not God. God is this omnipresent, omniscient, omnipresent individual. He can control everything. He knows everything. Sarvagya. Okay, Sarvagyapi. You and I are ordinary human beings. Always have that humility in your heart. Automatically, you will stop making mistakes and you will become better. This is my humble duty. I'm not saying making mistake is wrong. I'm saying why you are making this mistake now. You are coming to conclusion, check, and then you are not willing to change. Okay, once you make a wrong statement, now you don't want to say, boss, I'm wrong, I'm sorry, get out of it. No, you have to keep on justifying. Okay. Anyway, I would like to first of all appreciate Rito Banerjee, who's from the eastern region. I love Banerjees and all because I love Bengalis actually. Bengalis are highly smart people, according to me. Maybe I got a lot of good. I had a lot of great Bengali friends in school. So Rito Banerjee, so that's great. That's nice from Banerjee that he says it will be 90%. Rather go the other way, na ji, Rito ji. 50 lakhs ka 95% is 47 lakh 50. This case is only 45. So gone. That's all. Okay, so number of total voting power and better creators. What is that? Avinash answer. Since the given case, number of total voting power and paid up share capital is less than, not 50%, less than 95%. But that's beautiful. Rutraj is writing a very nice answer. I will read it for you. In the given case, the consent obtained by company satisfies condition of consent by majority of members, but does not satisfy condition of consent by at least 95%. So the company cannot proceed to circulate the financial statement. Beautifully. That's a nice answer, but that's a good application. First, you have to make the point that it is different. Okay, good. At least 95% of members are, Anna, 95% of in value of paid up capital, majority number. Suman Goyal, no. Okay. See, Our luck is this question may come in the exam. Then only all of you will remember, hey, that fellow wasted my time in the class. This question has come. Anyway. So, in the case of a listed company, the copy should be made available for inspection in the registered office during working hours, along with a statement containing the salient features of the documents. And also, that salient feature document is to be sent not less than 21 days before the date of meeting. This is for listed company. But also what listed companies do is, they send the entire annual financial report in PDF format by email. Okay. So it is as good as it will come to you. To your registered email with the DP, it will come. Along with the annual report and the annual notice of annual general meeting, this will also come. Not 190 members, only majority members. Majority is 101. Majority, 101. Here they go 160, not a problem, not 190. If you want to take a photograph of the slide and keep looking at it, you will understand. Or it is there in your board of studies material. Just have a look. Okay. Good. Now, every member or trustee of the debentures, etc., has the right to inspect the financial statement. In case of a company having a subsidiary or subsidiaries, it shall provide a copy of the separate audited or unaudited financial statements as prepared in respect of each of its subsidiary to any member of the company who asked for it. So, in addition to the consolidated financial statement, in case the member asks, then for each subsidiary, I had to give a separate standalone, okay, balance sheet, financial statement for subsidiary also. Once upon a time, the subsidiaries' balance sheets, audited report and all will be attached to the holding company's financial report. It used to be attached. Nowadays, no, only CFS is to be done. In case they want, the separate also can be given. See, all listed companies and such public companies which have a net worth of more than 1 crore rupees and turnover of more than 10 crore. See the combination. Net worth of more than 1 crore and turnover of more than. I am just going to highlight it for you so that you will appreciate that and means both the conditions are to be satisfied. And turnover of more than 10 crore. Even if one condition is not satisfied, you won't apply. So, in those cases where the shares are held in dematerialized form, then straight away electronic mode. As I told you, in the case of all listed companies, shares are held in dematerialized form, straight away you have to send it by electronic. In case the shares are not in dematerialized form, then you have to send a mail to the shareholders asking. This will be there only for unlisted companies whose shares are not in dematerialized form. So you have to ask, do you want it in electronic mode or physical? If they say electronic mode, consent, then you send it. Otherwise, you have to send that physical copies by recognized mode, by certificate of posting. Normal post, you can send it, certificate of posting. Okay. See, today, I'm not really concerned whether a company sends me the annual report or not, because once the AGM is there, automatically I can find that report from their own website. I won't waste my time keeping all this. I'll tell you, it is a relief, because once upon a time, I'm a member of about, once upon a time, 54 companies. Now my portfolio is only 39 companies. 54 companies, annual report will be coming by posting. And I will be keeping it for 3 years and all. There is to be a separate cupboard, only annual reports. It was a pain. Then finally I threw everything. Some money I got, 500 rupees, 1,000 rupees, that I simply did something with it. The point I'm making is waste of paper, you're cutting down trees, and the ozone layer is being depleted for all this. No need. Electronic may simply read it. Suman Goyal finally got it. Thank you, sir. Thank you. So moving on, we have contravention of section 136, company and officer, penalty of 25,000, penalty of 5,000. Now, the copy of financial statement should be filed with the registrar. Friends, section 137, very, very important. Do you remember? If you do not, if section 8 company or government company does not file, this section, under this section, it is made compulsory. Okay. So the financial statement should be filed with the registrar. So your point is, was the AGM held? Then 137.1. AGM was not held, then 137.2. So let us say that the AGM was held properly as per the due date. Then at that AGM, did the members adopt? Means, did they say, yes, your accounts are adopted? Then the annual report is to be filed with the registrar within 30 days of the date of AGM. Within 30 days of the date of AGM. 30 days. The financial statement should be filed within 30 days. Right? In case it was not adopted, for example, the members are having some dispute with the board of directors. So they are saying, we will not adopt this. Then also, even if it is not adopted, it should be filed within 30 days and the registrar will take them as provisional. And if you want, you can have an adjourned AGM where it can be adopted and then filed within 30 days of that said meeting. Suppose at the adjourned meeting also the accounts are not adopted, what happens? Believe me, that is the end of that company, gone. Because the ROC will come in full pressure to you. The regional director will come and sit on your neck and will inspect you and do all sorts of bad things to you and go. I'm telling you, if your members are not adopting the accounts, neither at the original meeting, nor at the adjourned meeting, that is the end of that company. I mean, I'll assure you that. It's a rare case. That means that company is absolute fraud. The members are so unhappy with the financials, they have no trust in the board. Am I correct? In those 100% that fellow, some golmaal is going on there, 100%. Otherwise, why should the members not adopt the annual statement? So that is very badly run company, no lack of corporate governance. So registrar will simply come swooping down on that company. So better avoid, but still, you have no other go. Point is simple. Suppose I am the examination, you might get a question. So-and-so company limited, there was an annual general meeting where accounts were presented by the board. The members did not agree to adopt it. There was a big hullabaloo and people were abusing the MD and all that. At the end of the day, they walked out and the accounts were not adopted. That is all. Accounts are not adopted. They will give you the date of the meeting and say, advise the board of directors on what is to be done now. So the only advice you have to give is, even if it is not adopted, kindly call for an adjourned meeting. In the meantime, within 30 days, you file the unadopted AGM with accounts with the note. And the registrar will take them as provisional. Then try to get it adopted at the adjourned meeting and thereafter file the financial statement so adopted within 30 days of that meeting. This is the advice you have to give to the management of the company. See, this is the problem. When we take up audit of companies based on some dreams and some press news about them, tomorrow when their management is seen to be bad, we will end up being party to that management's fraud. So even if you are not party, they will always be, that auditor will be identified as, hey, he was auditor of that company, like that, even though he might have been honest. Okay. So for example, I'm not telling anything, but basically you can read about it in the net also. It's not some secret information or slander that I'm telling. There's this gym was there, Talwalkar's gym. It's a huge problem. And auditors refuse to sign the balance sheet. Auditors refuse to sign the balance sheet. Forget not adopted at the AGM. Auditors refuse to sign the balance sheet. Like that. Dandekar refused to sign the balance sheets. Come out as a report. So these are all major issues. Good, bad, ugly. I'm not saying that it's intentional, but the registrar is an individual. So basically, the registrar is an individual. Okay. He is not an artificial judicial person. No. So company is an artificial judicial person. The company is an artificial judicial person. Registrar is definitely a human being. The registrar of companies is a designation. that in that designation, one human being only will be there. We are still not come to that stage where an artificial intelligence can sit as registrar. Though, if this way the computerization is happening online, everything is online, we don't need means, then there's a good chance that income tax officer and our registrar of companies can very well be artificial intelligences. They need not be human being. But as of now, believe me, they are appointed by the President of India. They are civil servants, and they are individuals and not artificial judicial person. Okay, a good question, but maybe your question is maybe 50 years ahead of its time. Maybe 50 years later, artificial intelligence will take over us. In which case, most of things will be run by only computers. In which case, ROC may also be an artificial intelligence. The income tax officers, as of now, faceless. So we don't know who it is. So it could very well be a computer that's us making the assessment. And with the advanced AI now, if that computer can read all the Supreme Court decisions, all the High Court decisions, and it can give a seasoned argument, and it can pass an order. Okay, like that. God only knows. Maybe that dystopian future will definitely be there. But as of today, God's grace, human beings are still sitting in those seats, willing to listen and, sort of understand from a human perspective. Okay. AI already taken the place of CA, don't worry. Many roles of CA are now done by AI. Certain decision-making situations are done by AI. So this is a broader topic which I can talk. In some of my advanced MCS lectures on strategic thinking and all, I used to share with my advanced MCS participants. I used to make them understand that, wherever any decision that you are taking is a algorithmic decision, is a decision that is repeatedly taken without much thinking, with a little bit of complexity, but that can be easily programmed, then that role is out. AI will come. So just check the job you're doing. How intuitive is the decision making? How much a computer cannot learn? How much a computer cannot be taught to do it? So that much you are ahead. Okay, that much you are ahead. So if your job is becoming so algorithmic and the decisions you're taking are something that can be programmed, your job is gone. AI has taken over. So this is that. So don't hope that it will take over. Try to become more advanced in your thinking so that when the complex things are happening, you should be able to give solutions which a computer cannot give. Okay, it's getting on that height of the surf, we are going. Some of us are still there, not allowing ourselves to become logarithmized or algorithmized. Okay, if that algorithm comes, that's it, you're out. Your job is out. Why CA? Even doctors can become algorithms. For all, you just go there, you tell what you are thinking. But then again, that's what I'm saying now. See, then what is the only reason why CAs are still preferred and kept? It's not only because of your professional expertise, your intricate knowledge of accounting standard auditing practices. Baba, computer can take 2 minutes. 2 minutes, it can become more knowledgeable than you. But only a chartered accountant who's got 35 years experience can look at that system and form an opinion whether this is there or fraud is there. That is highly intuitive. That part is learned by experience and cannot be taught to a computer. You understand? I'm not saying you should not have knowledge of accounting and all that. I'm saying accounting standard knowledge is algorithmic. A dumb computer can be taught all the standards, all the standard auditing practices, just like the vomit. But applying it in the real world to a situation, understanding the issues involved, and then coming out with the opinion, that is something still cannot be. And ethics. Computer has no, it's neither unethical nor ethical. Whereas a human being has ethical. That ethics is something that is still having some value. The opinions expressed here are, as usual, the opinions of this teacher, and no way the opinion of the Board of Studies or the Institute of Chartered Accountants of India. But as a member in practice, okay, I have the right to have my own opinion. Okay, this is the one valuable thing that I possess in spite of my very low income, in spite of my not being assured of PF, ESI. The one freedom that I have is my independence. Okay, and my ability to hold my own opinion. That I will never sacrifice. Okay. Chalo. Now, if the AGM itself is not held, then possibly because auditors are refusing to sign and all, then what they say, you have to file the prescribed documents. with the reasons for not holding AGM. You could say auditors have not signed it, sir, like that. Whatever it is, file with ROC. Then within 30 days of the last date before which the AGM should have been held, you have to file the documents. Okay? With whatever reason you want to give, you give. But you have to file it. Without filing, you cannot escape. Right? Chalo. Now, we will have a small break for 5 minutes. Small break. Okay? In the meantime, you can read through this. Just okay, I'll finish this also. See, there's and then exactly 7:45, we will have a break. This XBRL will finish it off. See, there is something called XBRL, Extensible Business Reporting Language. This is a kind of thing where once it's coded in XBRL, then it is uploaded into the MCA website. Now, if you want to collect data, it will be easier for you to collect. The program will be able to collect it. So many analysts, etc., when they are doing analysis, research, they will simply write bots to collect. So when they want to do that, if the balance sheet format is in the financial statements or in the XBRL format, it will be easier. So that extensible business reporting language, basically rules on where to enter, how to enter and all. So everything in the balance sheet P&L format will be entered in a different code, with a different code. That's all. That's all. There's nothing great about it, except that it is not mandatory for all companies. Only listed companies mandatory. Companies listed with stock exchanges and their Indian subsidiaries compulsory. Companies having paid up capital of 5 crore rupees or above, compulsory. Companies having turnover of 100 crore rupees or above. Friends, here there is no or. There is no or here. No problem. Or is implied. Any one condition is satisfied, you are out. Even if your turnover is less than 5 crores, if you are a listed company, XBRL. 5 crore and above, paid up capital, XBRL. Turnover 100 crore or above, XBRL. All companies which are to comply with Ind AS. Okay. If Ind AS has become applicable to you, then XBRL is also automatically applicable. Okay. No. So the companies which have filed their financial statements in XBRL shall continue to file their financial statements under that method, though they may not fall under the class of companies specified therein. Okay. So here, if you ask me what is relevant, only relevant is this, which companies come under XBRL. That's all. So, copy of financial statements by one person company, it is enough if you file within 180 days from the closure of the financial year. So, other companies, 30 days, 30 days, one person company within 180 days from the closure of the financial year. From the closure of the financial year. So, company having subsidiaries, if unaudited in country of origin, so you are an Indian company having subsidiaries abroad. They are not audited in their countries. Then you have to file in India in a format similar to the format prescribed in Companies Act. If the financial suppose you have, let us for example, you are having a subsidiary in Outer Mongolia. Outer Mongolia, maybe they don't have a CA institute also, so no auditing. Still, the Outer Mongolian accounts have to be filed in India in the Schedule 3 format. And if it is in Mongolian, then you have to translate it into English. Okay, that is all. For unaudited subsidiaries, suppose it's in Japan, it will be audited by a Japanese auditor, but then it may not be in English, in which case you may have to translate it and consolidate it. Right. Penalty for contradiction of 137, company 10,000 rupees, and continuing offense. Okay, there is a 100 rupees up to 2 lakh. Officers like MD, CFO, any other director who is charged by the board. And if nobody is there, then all the directors will be fined 10,000 rupees. And in case of continuing failure, 100 rupees for each day, up to maximum 50,000. So now, with this, we will give a small break before we get into reopening and all very exciting areas, reopening, revision, and all that. So I haven't seen any questions. So in case you have questions, put it up. Otherwise, we'll have a quick break. Okay. For say 5 minutes. Sir, break, sir. G, break. One sec. I'll just come to the query pad. Yes, welcome back from your well-deserved tea break. And moving on to the reopening of accounts. See, normally, once the accounts are audited and finalized, signed, audited accounts cannot be retouched in those days. The old law, there was no way you could do anything about it. Or at best, what you could do was anything left out, any omission, etc., or something which any entry which could not make, you could make it in the current accounts. So under the prior period adjustments, you can bring it out, show it separately. But now they are saying in some cases, you can reopen the accounts and you can get it re-audited and recasting, revising. You can file it again. Okay? This is very rare, not available in all cases. It's not a matter of right. Okay. So normally the accounts of a company shall not be reopened or revised or recast once it is laid in at an AGM and approved by the members. So that gone. But certain provisions of this section, you can do reopening. It's possible to do. Once an order is passed under this section for revision or recasting, it shall be final. After that, again, you cannot reopen and recast. Recasting means retotaling. Casting, C-A-S-T-A-N-G, is nothing but totaling. So when I have a column of figures and I total them, it's called casting. Okay. And revision is, of course, changing the accounts, the representation and all. So no order for reopening shall not be made in respect of reopening of books of account relating to a period earlier than 8 financial years. So because you are going to retain your books only for 8 years now. So before that, how can you pass an order for reopening of books? But suppose there is an investigation by the central government, and as part of that investigation, the central government has directed the company to keep the books for a period longer than 8 years. Okay. So we started the investigation now. So we said, hey, even if the 8 years is gone, you have no business to destroy these books. Keep it safe, or they might have taken it with them. They might have seized the books, in which case those books can be reopened. Okay, even beyond 8 years, because they are there. But normally, if there is no investigation, 8 years is all you have to preserve. So beyond earlier than 8 years, you cannot go. Now, for reopening, for the purpose of revision and recasting, the application can be made by central government, means the MCA itself, income tax authorities, SEBI, a statutory or regulator body, any other person, etc. Okay. So the application has to be made to the court or tribunal, and the court or tribunal passes an order. So it depends. See, this application will be made as part of another bigger issue. Okay, by which, we might be trying, for example, I will tell you a simple example. Suppose the company's MD has siphoned the funds. Okay, now because of that, he has falsified the books. Now you can say, hey, we go back and recast it. And the income tax authorities will say, whatever income was not disclosed, now he has to disclose and pay the tax. So the dividend will also have to be increased. Like everything will be there. So whatever it is, we can do that now. See, one more thing I'll tell you. All this is part and parcel of a fear psychosis which was created due to that one Satyam scam. The entire 2013 Act, especially accounts and audit, some of these topics, you'll find there's a huge fear psychosis operating here. That the MCA wants to avoid another Satyam. So they're bending over backwards to ensure that anything that they learned as part of the Satyam scam, they have implemented it in the 2013 Act. One thing they learned was that Satyam accounts could not be recast, revised. See, Satyam accounts were patently wrong, but the auditor signed it, wrongly signed it. Now you can't go back and do something, because only if I recast it, the opening balance can be carried forward. See, I cannot obviously carry forward a wrong opening balance, boss. So how to do it? There was no method in the law at that time. So now they've created that method by which, the MCA or whoever wants can go to the court or tribunal and get an order. The relevant earlier accounts were prepared in a fraudulent manner. Now you got the point? So that central government, etc., should establish that the relevant earlier accounts were prepared in a fraudulent manner and the affairs of the company were mismanaged, casting a doubt on reliability of accounts. So casting means throwing. See, there the word casting, in recasting, the word casting is used in the concept of totaling. Here, the word casting is used in the concept of throwing a doubt, okay, on or revealing a doubt. Okay, when you throw the light, now it's a casting, a doubt on reliability of accounts. So there is some doubt about the reliability of the accounts itself. So the notice is to be served to the applicants and other persons concerned, and their representation is to be taken into consideration. Finally, the authority, the tribunal or court, will pass an order. This is a straight reaction. I would even use the word knee-jerk reaction to Satyam scam. Okay, so this is reopening of accounts. This is not, the company has no role to play here. The application is made by other people, including a member. A group of members can do it, whatever. But company has nothing to do here. Whereas here, it is voluntary revision of financial statements or board report. Voluntary revision. See, it should appear to the directors that the financial statements or board's report does not comply with section 129 or 134. Including, see, anything, we have made a mistake. Something has happened, wrong, mistake. So we want to revise it. So the board may prepare a revised financial statement or board report in respect of any of the 3 preceding financial years. Then they go to the tribunal for prior approval. Then tribunal will give notice to central government and income tax authorities, and any representations will be taken into account. And then finally they will say, yes, go ahead and revise. So the copy of order of the tribunal and the revised financial statements and board report will be filed with the register and taken on record. So the idea is revision is possible now. In case any mistake has happened, you can revise the earlier year also. But see, if you ask me how many applications have gone under 131, I don't know. I hope not many, because this would throw a bad light on everybody involved, the board of directors, the audit committee, the auditors themselves. So it's better that this doesn't happen for any company. Anyway, such revised financial statements shall not be prepared or filed more than once in a financial year. For the same financial year, you cannot keep on revising it. Only once it is done. The detailed reasons for revision should also be disclosed in the board's report in the relevant financial year in which such revision is being made. So in that year, see, for example, if now 23-24. So 24 March accounts auditing will happen. And now we find that 22 is wrong. So we revise 22. Can be done. We get the order of tribunal and all. So revised 22 will be filed with the ROC now. For 24 March accounts board's report, we should state the company has revised the accounts of 22 for this reason, like that. Some provision was left out. Something was pointed out to us. We should not have done it. Okay. See, this is where the auditor's documentation also becomes very important. Suppose the auditor has very clearly said, this is to be done. But of course, then he should have qualified it. Suppose later on they feel that qualification they want to remove, then they can go back, revise it. Unqualified, you can come back. Possible. That's a valid reason. Because I told you, you should do it. You didn't do it. Later on, somebody advised you. Then you realized you made a mistake. By then, I have audited and I have qualified and I have gone. Now you want to go back and revise it as per what I have told originally. Please go ahead and do it. Okay. There no shame on me. But better be careful is all I would say. Where copies of the previous financial statement or report have been sent out to members or delivered to the registrar or laid before the company in general meeting, the revisions must be confined to the correction in respect of which the previous financial statement do not comply with the provisions of section 129 or 134. You cannot totally change your entire financials and say, hey, this is the one. No. Anything there is a non-compliance, only you have to bring it here. Okay. And any consequential or necessary alteration connected with that. For example, suppose some sales have been left out by you. Now you cannot go back, revise it and include that sales. And thereby, that is why, they are saying the income tax office will be given an opportunity, because they will ask, hey, Baba, if the sales was not reported by you at that time, it is unexplained, ma. It is concealment. Come on, let us talk about that. So such things cannot be brought into this framework. Is the point. If you still want to do it, go ahead and do it. Then you will have to revise your return. So you can't, if the time is limit is passed, then you have to go. So many things are there. You have to comply with all. Yeah. See, that's what I'm saying. But they have given a escape valve for genuine cases of genuine inadvertent omission or whatever. The central government may make rules and all that with regard to this. How the also provisions with respect to the functions of the company's auditor in relation to revised financial statement and whatever. Okay. Now we move on to another very interesting area, which is called NFRA, National Financial Reporting Authority. Now, I've already introduced this topic. Yeah, I do agree that much of this is pure dry theory. That is why you also not able to, you are not having any doubts on this. Somebody was asking very correctly, what is the weightage of this topic? I'm not aware. I have not done that study in a long time. I think I should do that. I should see how the topics are placed. But this topic will not be avoided. Believe me. For talking real weightages, I would say anywhere from 6 marks to 8 marks. Minimum 6. 4 to 8. You can say 4 to 8. 4 to 8 in this topic. So, National Financial Reporting Authority, the historical background. See, I already gave you a background. The Satyam scandal took place in 2009. That was a major upheaval. And it came immediately after the global financial meltdown. So, everything started hitting the financial system. So, in fact, the 2008 global financial meltdown, then the 2009 Satyam scam. Together, the Indian stock market went into a spin. Thereafter, for another 5 years, it never could, Then the act came, 2013 came. Then slowly they started developing. Now, 16, 17, nothing much. Then there was a small, now again 22 onwards, you are seeing 20, 21, 22. You are seeing the next boom. So that was one boom that nobody ever got a benefit out of, right? Then 20, you had your Corona, and also that was a messy period of our financial markets, messy. From 2007 to, I could say, 2017, it was messy. Then when something started recovering, when again Corona came, but luckily Corona did not control. It did not reduce, went on. So that in-between period was a messy part. So at that time, the Satyam scandal also takes place. And the Standing Committee on Finance proposed the concept of the NFRA, National Financial Reporting Authority, for the first time. And the idea was the NFRA will be an independent body which will be monitoring the auditors also. The auditors are usually controlled by the Institute of Chartered Accountants of India, right? I'm a member of the Institute of Chartered Accountants of India. I'm bound by the Institute. I come under the Central Council, and I'm bound by the various rules given by to me, etc., and which I follow. So anything that I do that is wrong, they have the right to call me up and ask me, hey, there's something called the disciplinary proceeding. There's a separate disciplinary committee, etc., etc. Now, after Satyam scam, there was a sudden feeling that, hey, kiss custodius ipsos custodes. Kiss custodius ipso custodes. Meaning, who will police the policeman? One auditor, rightly or wrongly, did one bad thing. Then every auditor in this country has been painted with the same tar brush. Tar brush, black paint. One fellow did something bad, everybody got painted. And I'm a public speaker. I used to speak heavily in public. And every time I'm addressing an audience on valuation or investment or portfolio or some other topic, okay, and somewhere in the question answer session, one person will stand up and say, Mr. Srikanth, you auditors are frauds. How do we trust the audited financials? Like that. I have to listen to that. And sometimes I used to also gently ask him a different question. And mostly these persons who ask these questions are engineers. So, I mean, I'm nothing against engineers. Just so happens that they were IT company people who would be more into tech analysis and trading. So their basic concept was don't bother about financial statements and ignore fundamental analysis, go for tech analysis. It's basically a tech versus fundamental analysis argument. They will nefariously bring Satyam into that argument. See, I am a fundamental analyst using balance sheets and information and my perception of the industry, etc., etc. They are absolutely going to ignore the company and its financials. They'll go purely by market momentum, physics, graphs, curves, mathematics. So totally, you are that side and this side, alag alag. But then in that argument, they will bring in this Satyam thing. So I will ask him, Jeep, I have only one question to ask you. It so happens I was in Hyderabad on 25th and 26th of this month. And it so happens I went via Panjaguda. I was going from airport to airport, and from airport you have to come via Panjaguda to go to Secunderabad. So at that time, whenever I come near the Panjaguda flyover, I put my head down and I cover it, because I don't know if those of you from Hyderabad will remember that Panjaguda flyover, once it broke, we remember that entire floor of that flyover, it went down and people were injured and all that. And at that time, they said Panjaguda flyover, same 2009, 2010. Okay. So happens it came, and it was in Hyderabad. Same place was Satyam's head office was there. Panjaguda flyover also. So as per Vastu, I think Hyderabad was in deep trouble at that time. So then I asked to ask him, see, Panjaguda flyover was constructed by Gammon company. Gammon company is a pure engineering company, right? Whoever made that mistake, blah, blah, I don't care, Baba. A civil engineer only built that bridge now. Therefore, I will not trust any bridge anymore. After that, I will never claim any bridge. Why? Because one flyover broke. So don't trust the civil engineer. Can I say like that? Immediately, they will all start laughing and they'll say, no, Srikanth, how can it be? So just because one engineer made a mistake, the other bridges cannot be mistrusted now. Same way, one auditor makes a mistake, how you can have mistrust about all the auditors? So sometimes this audit, thing, will be used, okay, and they will be trying to do it. And so I used to give that, and some of them will laugh, some of them will still be uncomfortable. Whatever it is, the government was not happy. They said, no, we don't trust you guys. So we will have one more body, which will be called NFRA, the National Financial Reporting Authority, is an independent regulator for the auditing profession. The idea was to improve the transparency and reliability of financial statements, etc. What you should know here is NFRA will have the power to make recommendations to the central government, means the MCA, on formulation and adoption of accounting and auditing standards. So though the accounting and auditing standards will be sort of prepared by the ICAI in consultation, it will be recommended by NFRA and then CG will announce it. Okay, it used to be like that. Monitor and enforce the compliance with the standards, oversee the quality of the service of the professions. There they are common, not just CA. CMA and ICS also are covered, and suggest measures required for improvement. Perform such other functions relating to the above activities. Now, there will be a chairperson, not more than 15 members. Chairperson will be a person having expertise in accountancy, etc. Chairperson will be appointed by central government, and they are all members in full-time employment with NFRA, shall not be associated with any audit firm, including related consultancy firms, during the course of their appointment, and 2 years after ceasing to hold such appointment. So, a person cannot be chairperson of NFRA and then be appointed as a partner or become a partner or be anyway associated with a audit firm or any related consulting firm for 2 years. So, the NFRA will have the power to investigate into any matters of professional or other misconduct committed by any member or firm of chartered accountants. Okay, so they will have power, but provided the company will come under the purview of NFRA. Please note, we are going to see a whole lot of companies that will come under the purview of NFRA. Only those companies, auditors, can be investigated. The professional misconduct can be investigated into by NFRA. In other cases, it will be the institute that does it. Okay. So where NFRA has initiated an investigation, no other institute or body shall initiate or continue proceedings. So in those cases, only the NFRA will have. Okay. Now the NFRA is a quasi-judicial body. It will have the powers of a court while trying a suit, like taking evidence, summoning and enforcing attendance of persons, inspection of any books, etc., issuing commissions for examination of witnesses or documents. Everything will be the same powers as a civil court are vested with the NFRA. Though it is not a court, it is a quasi-judicial body. Don't worry, there are many quasi-judicial bodies. The NCLT is a quasi-judicial body. The NCLAT, Appellate Tribunal, is a quasi-judicial body. NFRA is a quasi-judicial body. So all of them have these powers. Later on, we might see fiat. No, it's not there for you. But so these are all quasi-judicial bodies. They are not court, but they are vested with the same powers as are vested with the civil court under the Civil Procedure Code. With respect to summoning of witnesses, production of books of account. So once they order, now you have to bring it. If you don't bring it, it will amount to contempt. Like that. Okay. Issuing commission means, suppose a person is sick or invalid or some document is in a remote location, then they can send an officer of the court to go there and inspect and bring. Okay. For example, recently, my son is an advocate. Recently, one of the district courts where he's appearing, magistrate court where he's appearing, the magistrate appointed my son as a commissioner, advocate commissioner, to go to one place, measure the land along with the surveyor and examine the documents and give his report. That was the job, my son's job. For junior advocates, they will give this type of jobs. It's called commission. So then my son will produce it. That will become part of the evidence in the proceedings. Okay. So to that extent, he has to also be impartial and see that whatever he sees, he has to report. So I'm just giving an example. Where the professional or other misconduct is proved, NFRA shall have the power to make order for imposing penalty. In case of individuals, 1 lakh, up to 5 times the fees received. Or in case of firms, 5 lakhs, up to 10 times the fees received. So audit of a listed company becomes very, very serious affair. In case there is any problem, NFRA will simply catch us and take us and put them and tell me, what are you doing like that? So for being appointed as auditor, then thereafter that person will be disbarred from being appointed as auditor, internal auditor or valuer for a minimum period of 6 months to a maximum 10 years. There are many auditors who have been disbarred. And today they cannot be auditor for 10 years or 3 years or 4 years or what. See, let us say that he is disbarred for 5 years. 5 years later he comes back. Something is gone. Nah? Some respect is gone. Nah? All said and done. Money cannot get you respect. Money cannot get you respect. Believe me when I said, what all money was earned by that bad activity, what all respect has gone, that money cannot replace the respect. Now, if in case any person is aggrieved by any order of the NFRA, see, the NFRA is a quasi-judicial body. They are not the final authority. So they may pass an order which Mr. A may not be happy with. Then he may prefer an appeal before the NCLAT, the National Company Law Appellate Tribunal. See, there's National Company Law Tribunal now. The NFRA and NCLT are at the same level. So if the NFRA passes an order, against the order, you go to the National Company Law Appellate Tribunal. Thereafter, from the NCLAT, you go to the Supreme Court. That's all. Straight away. Now, very, very important. Companies in respect of which NFRA may exercise its powers. Listed companies, unlisted public companies, having paid up capital greater than or equal to 500 crore, turnover greater than or equal to 1,000 crore, outstanding loans and debentures deposits greater than or equal to 500 crore on 31st March. Okay. If these are satisfied, only then you have to come under NFRA. Otherwise, no. Insurance companies, banking companies, companies engaged in the generation or supply of electricity directly come under NFRA. Bodies corporate or companies referred by central government to NFRA in public interest. So outside of this, if central government feels, hey, this company, better you see it. Suppose a company is doing some activities that seem to be fraudulent, then they may refer it to the NFRA. Though it may not strictly come under this category. Bodies corporate registered outside India, which are subsidiary or associate of A to D. Please understand. It comes under A to D. The holding company comes under A to D. Then automatically the subsidiary or associate will come under NFRA. If the holding company comes under A to D, then automatically the subsidiary will come under A to D. Mainly listed companies. The listed companies today, NFRA is a watchdog and a bloodhound. So, in addition to this, in the case of a company or body corporate referred in A to D or above, we saw that now the subsidiary or associate company of it registered outside India also will be taken, provided the income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or consolidated net worth of such company or the body corporate. See, this category, this D, this E category, the last category, they put one condition. They say the income or net worth of such subsidiary or associate company should exceed 20% of the consolidated income or consolidated net worth. So you should take subsidiary plus holding, consolidate. Then see the consolidated income. Of that, the subsidiary or associate should have more than 20% of. If that is not so, then ignore it. That's the point. So, for the purpose of this section, NFRA can recommend the accounting standards, auditing standards, and all that. Of course, if we seek additional information from the ICAI, so ICAI would always have to recommend, because all said and done, we are the professional body, right? However much there may be a body that controls the ethical standards of doctors, that body cannot prescribe medicine. For that, that body or its members should pass the examination. Okay? Even if they have passed the examination, only that member at that point in time auditing that company exercises the professional, shall we say, application. So the point here is, that's what I'm saying, it's very difficult to judge like that. But still, if there is a blatant disregard for principles of equity, for, fair dealing, fraudulent activities are there it's different. But for some small variations in the wordings and all, if you're going to pull up people and hurt them, it's not fair. In case any company or officer of a company or auditor, etc., contravenes the provisions of the NFRA rules, then the company and every officer of the company shall be punishable under section 450. See, 450, later on, it is not in your syllabus. 450 is a section, common section. In any section, if there is no penalty provided, where no specific penalty is provided, then directly 450 will apply. So, common penalty provision, 450. It's not in your syllabus. So, there it is fine up to 10,000 rupees, and where the country is continuing on, 1,000 rupees for each day. Okay. Now, the NFRA shall meet at such times and places and shall observe such rules of procedure, all that. Then the central government may appoint a secretary for that to take care. The head office will be in New Delhi and it will meet at such other places. The accounts should be maintained as prescribed by CAG. The accounts of the NFRA shall be audited by the Controller and Auditor General of India. And the audited accounts together with the audit report shall be forwarded annually by the NFRA to the settlement, right? And the NFRA would prepare an annual report. This will also be forwarded to the central government. And once all this is got, then the central government will place the annual report and statements before both the houses of parliament. Because NFRA is a public body. So any finding of the NFRA, any report of the NFRA becomes a public document. See, what you should understand, when any paper is placed before both the houses of parliament and comes under discussion by parliament, that paper becomes a public document. Exactly. Similar to what you file with the MCA. Anything that comes before both the houses of parliament becomes a public document. Parliamentary proceedings are public documents, not secret. You and I as citizens are entitled to go and see. So the central government, okay, we've sort of come to one level. We'll go on and finish that also. The central government prescribes the accounting standards. If NFRA is constituted, then recommendation by ICAI and recommendation examined by NFRA. Till NFRA is not constituted, nakas. Now NFRA is very much there. Therefore, ICAI recommends the accounting standard and then NFRA examines it and recommends it and then clears it. Yes. Mr. Rituraj Honmane was very correctly in saying that CSR is there where we can go. And tomorrow and the next class, we'll take up CSR and finish it. Okay. So, Rahul Sharma wants me to stop here. I also want to stop here. How can we see NFRA document? Go to the Google, and say report of NFRA, you will get it. It will be running into 700 pages. Please go through it. Okay. And a particle-ship at NFRA. Who's that? Someone go help. Sir. Only you can do your articleship only in an audit firm. Okay. With the firm of chartered accountants. Thereafter, I think industrial training you can go to corporates, a company. NFRA will not allow you to do. Okay, done. So let's have a great evening ahead. It's raining heavily in Chennai. I'm sure, I don't know about other places. After all, this is commonly called Sharad Rudu. So in the next class, as Rituraj Honmane rightly said, the topic includes CSR, questions on which in almost every attempt. So such an important topic, we won't start now. We will take it up in our next class. Inshallah, we'll finish it and maybe any other questions, we will take it up and close. Wish you a great evening ahead. Bye. So class over, sir.